No, he's on his way in. Looks like he might be joining us a little bit later today. So it is Thursday. Thursday is Drips Thursday. So the gorilla usually comes in and does some pretty cool, like high level type data. He'll say things on here that on our private show, that is, about geopolitics, how it might affect the market, certain events, things like that. He shares things from on high that he doesn't share anywhere else. So, and we do expect that to be later today. Of course, that's in the private group, not in the public. So what you're looking at right now is actually the free, open to the public version. And 1 second here. Sorry about that. And so, we open this up because we have a lot of people over at, what do you call it? Over at Algo Factory who, they're new. And so we wanted to get some basic concepts out. And of course, our website, algofactory.tech, has a whole university. And the first part of the university is basic concepts. So, if you go there, you can get those basic concepts just by going through the classes. However, trading is a massive, massive subject. So, to try to squeeze all of the basics into an online university is like, that would be hundreds and hundreds of videos, virtually impossible. So what we do is we have these shows, and we actually have our main private show where people can come in, and whether they're able to look at the show as it's happening or to look at it afterwards, to look at the review, or to review the recording, I should say. Either way, you're going to learn by osmosis, right? You're going to kind of pick it up just by, listening to the language, falling in love with the process, as the gorilla likes to say. So, you're able to, even though you're not necessarily an Algo Factory private client, you can actually come in here and ask questions, right? Find out whether or not this is for you. Even if you're not necessarily a trader, your questions could possibly help out some of our traders because, again, we have beginners as well. So feel free to come in and ask questions. Also, if you are, what do you call it? If you are on YouTube and you like what we're doing, mash that thumbs up button, mash the like button, subscribe to us. We do this every day. We do it from 8:30 a.m. to 9 a.m. EST. This is basically, well, not basically, it is 100% free. So take advantage of us. At the moment, I'm going to go ahead and throw a link out there, give people a chance to kind of hop on, and let's see if we can bring in some more listeners. Give us just a moment here. Okay, everyone, join us live for a free Algo Factory. Okay. Valley Girl is in there. Valley Girl saying a terrific Thursday morning to you all. Yes, and welcome aboard. Thank you, Valley Girl. Always good to have you here, in here with us. So thanks for joining us. All right, so good. Let's take a look. We'll get the link out. I'm going to take a quick look over to see how many people are watching. Okay, we got some people from the private group as well. Usually the private group doesn't really pile in until a little bit later, but it looks like they're here now. So again, there's the on the screen is the URL. Feel free to come check that out. Check out what we do, and our offer is amazing right now. Okay, so what we offer is worth hundreds of dollars a month, but we kept it to a low $49.99 so that people can actually be able to afford to come check us out. See, okay. Give us a chance. This is not going to be too long before there are a lot more people in here. We won't have the ability to keep the price that low because it's just going to take so much to manage everything. So if you do happen to, work with us and join us at this $49.99 a month, before we raise the price, you'll be grandfathered in for that basic tier of service at $49.99 for as long as Algo Factory exists. We won't raise the price on you. So definitely, and that's as long as you don't let your membership lapse. So keep that in mind as well. So yeah, that's that. And just a quick reminder, and this is what I always say in these shows, an algorithm is not something to be scared of, right? So, people hear the term algorithm and they're like, oh man, it's all like some kind of, computer genius. And, I don't think building algos is for me. And look, I mean, algorithms are simple. Driving to the store is an algorithm. You have you take a right here, you take a left there. It's anytime you are, anytime you have a set of conditions that you will you'll meet, and then you make decisions based on that. And if the next condition comes up, you make another decision. Anything like that, those are all algos. That's all algo talk. You're already doing algos. Tying your shoes is an algo. Anybody who is doing old-fashioned, and I say quote unquote old-fashioned, but anybody who's manually trading, like you're trading crypto, and who has reached like a level of success, any level of success, I can bet all the money I've got that you're using an algorithm, whether you know it or not. So what we do is we help people actually refine their trading method, otherwise known as an algorithm. And then once you have that refined to a point where you know it's profitable, and we have ways for you to kind of determine whether that's profitable or not, and that's before you really are trading it a whole bunch. We help you through the building process, through the back testing process. We have a forward testing process. And once that's done and you have an what's called expectancy, you have a level of probabilistic success, to a statistical degree of certainty how successful your algorithm is going to be, how successful your trading method is going to make you from a quantifiable standpoint. Then what we can do is we can introduce you to our in-house coder, who basically is, having an algo coded can go anywhere from 5 to 10 grand from just the numbers I've heard and been quoted. But we'll have somebody who can do that for a fraction of that price, and that's in-house. And as a matter of fact, I've been working with every single day this last week or so, refining my algorithm. So that's really exciting stuff. I've shared the success rate with you guys on that too, as far as what the back testing is telling us. And of course, the forward testing is in process. So we'll have a little bit more data on that once everything is in play. Okay, so we got MavBet, good morning, and Valley Girl in both YouTube and the private group. So good to have you in both of those areas. And you two, I'm going to ask, and anybody else, I know we have a few more people in the private group that are not talking. Ask questions. Let's go ahead and get some questions out and see if there's anything I can help you with, because I know that there are a lot of you are either kind of going through the courses and trying to absorb the info, which, at first that could be a little bit daunting. And I'll come into these classes, kind of participating in these, or at least reviewing the recordings afterwards, can be quite helpful. That can be very helpful. Exciting. We got Woke Finder in the house. So Woke Finder is somebody, I talked to Woke Finder in the background quite a bit over on Discord, on the Rogue Discord. And so we've had some conversations, real nice bloke, if you will. We got MavBet over here. Okay, so everybody's piling into YouTube. That's kind of fun. If you guys have some questions, Woke Finder, I know you're kind of new, and if you have questions about trading, if you want to know, you could just ask for like a chart, like how do you think this asset's going to do? How do you think that asset's going to do? Even just watching me chart things can give you a little bit more of an understanding of how I do things and how things could be done. So, go ahead and ask some questions. And until those questions come up, I'm going to go ahead and take a look at the economic data. Let's see here. And we'll see if we can have an idea as to what's going on. All right. So I pulled it up on the screen. 6:30 a.m. my time, 10 minutes ago, were the unemployment claims. Let's see what the data was. Now, this is a weekly metric, and that red folder on here says that it is a high impact event. So basically you had a couple of the Philly Fed, which is orange folder. That's also a medium impact event. Let's see if it's affected the market at all. Let's see here. Let's look at the euro. It's a good standard place to look. Let me go ahead and zoom in. And looks like not a heavy effect. There seems to be some effect. This is a 5-minute chart. So the data came out at 6:30, and the dollar looks like it got a bit stronger, if anything at all. It might be different, but basically the unemployment claims came in lower than expected. Okay, so that means, that makes sense. The way that this is perceived, and I'll get to that Arcadia aka Woke Finder. I see your question on there. We'll answer that in a moment here. But the way the unemployment claims are perceived is that, okay, so what they're doing is they're hiking the rates, right? If you're watching the news, Fed Chair Powell is hiking the rates. And the whole idea here is that if he hikes the rates enough, it's going to kind of cause things in the economy to rattle, if you will. And that means that, let's see here. I'm looking at another panel here. Give me just a moment to get that set up. When you hike rates, it means less investment happens. Like there's less money velocity. It's more expensive to fund businesses, things like that. And we've had a problem with inflation since the pandemic. And essentially, the concept is, okay, we printed a bunch of money. That's what a lot of people think is the main reason for inflation. And it may well be. People also seem to be sort of discounting the concept that the supply chain issues were contributing to the inflation problem as well. So either way, it's a problem. So that as they hike the rates, it's going to kind of put pressure on business, and that's going to cause inflation to go down because basically there's not as much money to go around. Prices get cheaper because people don't have the money to pay for things. So essentially, it's like killing the economy on purpose in a way. I mean, that's a real reductionist way to say it. Well, employment claims came out less than expected. That means that the economy is doing a little bit stronger. The economy is a little stronger than expected. So that in and of itself is kind of like this minor indication that we might see a hike in rates, or at least no plan to stop hiking, or whatever it is, right? It's more of a hawkish look. Although the CPI, was that this week? No, what was it? Like retail sales came out on Tuesday, and that was lower than expected by a fair amount. A few other metrics came out this week, so it's kind of a little bit mixed data this week. I'm going to say leaning to the dovish side, meaning that most metrics came below. Most metrics were kind of pointing to a little bit weaker of economy. This unemployment claim is a little bit higher, or I should say a little bit stronger economy look than was expected. So, that being what it is, I don't know. I mean, it did create a small move temporarily. And that looks like a big move. What you're looking at right now, that looks big, but the reality is it's just continuing along, continuing the way it was going to go. It just got a little bit of a boost, I think, from the actual news. So what you're seeing here is the news occurred right on this bearish white candle, and this is a 5-minute chart. So this is a very, very zoomed in look. So everything you see here is going to be exaggerated. If you look on, say, like the 3-hour chart, which is more of a kind of like a swing trading time frame, you can see everything was kind of going to head down anyway, and you just see a little bit more of a move down as that news came out. So, and again, the way I do things is I don't really trade the news. I wait for the news to come out, and now let me complete that thought. I wait for the news to come out, and then I let the economic shock, if you will, kind of pass, let the markets digest the information, and then I go ahead and trade as the technical market unfolds. So, I mean, looking at the EUR, the way I probably would look for this to go, there's probably going to be like a liquidity grab because the euro does that. So basically, the way liquidity works, let me go to a little bit lower time frame. So I'll go back to that 5-minute. Okay, so price right now, from a charting standpoint, is at a support. Okay. So what does that mean? Well, there is a pivot point in price just back on the 19th July. A couple times price bounced at the same level that it is right now. So there's a decent chance the price is going to stop here. Decent chance, not 100%. The price may kind of bounce back up and grab some liquidity in this general area and then head down. And if that happens, then what I probably would do is look for like a short. And of course, I have algorithms that will tell me whether or not that's okay for me to do based on my rules. But I might take a trade that looks like this. And if the metrics are bearish enough, I might take some extended targets. I mean, this might actually turn out to be a very profitable trade. So that's where my eyes are on. And of course, I will share that trade in the group today. I mean, this is like a massive risk to reward ratio. I'm not really mapping it out. I'm just kind of more or less eyeballing it. but that the trade might look something kind of like this. All right, so don't take that too much for granted, but that's what I'm looking for today. And you can see already this purple candle, it looks like price might go ahead and make that turnaround already. So that's a charting aspect of how I think things are going. Arcadia has a question. I've been reading about tech analysis, TA. Did you start off with Dow theory of tech? No, I don't think so. I mean, I know Dow theory. I've forgotten what it is, but that's Dow theory is like, I don't know. I was in crypto. We don't really pay attention to the Dow. But the Dow theory is that stock price movement is a form of TA that includes some aspects of sector rotation. It's a trend in which two stock market averages reach notable highs, new highs, implying that the broader market is likely to head higher. So let's go to the Investopedia. Okay, so Dow theory predicts the market is in an upward trend if one of its averages advances above a previous important high, accompanied or followed by a similar advance in another corresponding average. So it looks like it's based on EMAs, I'm assuming. So there's market discounts, okay. Market trends, 3 phases. Yeah, accumulation, public. Okay. So in a way, I mean, look, no, that's not where I started out, but it's just when you start to trade and you trade enough, Dow theory is going to be the way you think. I mean, it's kind of basic in trading. Price will start, like, let's say the market cycle looks like this, right? Something went up and then it comes back down and then you end up down here, right? And you're at a discount phase, aka accumulation, right? And then after enough accumulation, the price starts to go back up, right? And as it heads back up, you get to a point where people take profit, and that's called the distribution. And then once they're done taking profit, price heads back down. Okay, so that's your Dow theory. It's pretty simple. I mean, it's not where I started, no, but it's a good understanding of how markets work. You have accumulation, you have distribution, and of course the trend up is going to be what's called public participation. So I mean, a lot of that's going to get distilled into like the Elliott wave is a good kind of distillation of that. From a technical standpoint, you're kind of ignoring all of the conversation about the market, but you have your 5 waves up, right? That's your Elliott wave, and then your Elliott retracement is going to be something like this. And then you'll start your new Elliott wave after that. So the Elliott wave, and we did a whole kind of a course, if you will, a mini course on the Elliott wave a few days ago. It's just a way to mathematically kind of look at this sort of cycle, and and of course there's Elliott waves within Elliott waves before and after Elliott waves. So I mean, one way to know about Elliott waves is here. Watch, you'll have on this wave 1, you'll have a little mini Elliott wave, right? And then you'll have a little mini retracement afterwards, like this. So that's just the way Elliott wave works. It's kind of fractalized like that. And if you were to look at it from a Dow theory perspective, then you would be able to look at it as the accumulation was before all this happened, and then maybe a little bit of your second wave might be part of the accumulation, and the third wave tends to be more that market participation, and then wave 5 tends to be where the distribution happens. And then you start back over, right? You go back to the discount phase, aka accumulation phase. So Dow theory is good to know. It's not where I started, but it kind of works. So no, Arcadia, you're not overcomplicating things. So here's the thing about it. You got to start somewhere, right? Dow theory is a great place to start. It's where a lot of your concepts come from. So I think you started at just the right place. That's just fine. It's not where I started because I kind of just jumped into trading My story is like back in 2010, 11, it was post GFC, post Great Financial Crisis, and I was trading silver because, silver was the hot ticket. So basically, um, hold on, just quick interruption. We got the gorilla coming in here in about 8 minutes or so that's good. He'll be in for the Thursday show for the private group, so that's just fine. So anyhow, I started trading silver, and I was just looking at the charts. I mean, I didn't have any indicators up. I was just looking at the basic chart, like none of the screen that you're seeing right now. It was just just kind of like not even on these trading platforms, nothing. But I'm like, man, there's got to be a way to predict this. Just looking at it, I'm like, there's got to be a way to predict these prices. And I started to kind of analyze it, just doing pattern recognition. And not that I had a whole lot of success doing that, but the concept was there. Like, hey, I bet you I could figure out a way to kind of do this. And then what ended up happening is I got into Bitcoin a few years after that. And as I got into Bitcoin, I learned about altcoins because it's kind of a very long story, but I came across like Bix Weir first. That's how I found via the Grill and his channel. And then with Bix Weir comes Cliff High, and with Cliff High came altcoins. And so it's kind of a longer story, but I got led to doing what's called just technical analysis and trading. I started there. And then I broke off of that for a minute because I was and I didn't know I was building an algorithm. I didn't understand this, but I actually built a spread arbitrage algorithm on a very antiquated exchange called Ether Delta. And there were some exploits there that I was able to take advantage of from like a purely algorithmic order book standpoint. And I was able to make some money on that. But that technical loophole closed, actually. The ability to do that was gone because CryptoKitties ruined the Ethereum blockchain for several months at a time. And then Ether Delta actually got put out of business in a way. So I went back to technical analysis, and with technical analysis, the bull market in 2018, 2017 was very, the algo to build there was super simple. It was like buy the dip. But I got really good at choosing targets, choosing stop losses, and maximizing those dip buying opportunities, and really learning how to read charts and price action. And then what happened was in 2019 and late 2018, it was, of course, the market melted down. And so, doing spot Bitcoin trading on these exchanges wasn't very profitable. So I learned about Forex, because Forex is, up or down doesn't matter, right? When you're trading currencies, you can make money on the way down, you make money on the way up. And of course I learned about crypto derivatives, which has that same aspect. And so I changed everything I was doing, and I moved into this, kind of the algo trading that you see today, using indicators, that kind of thing. Valley Girl, no, I was never really, I think I talked to Bix once or twice. That's more a V thing. I don't have any contact with Bix. Nice guy, nice guy. I think he kind of falls under the Trust the Plan group. I'm not sure if he does or not, but no, I don't have any contact with him. So yeah, I'm not very nice guy. Wouldn't mind talking to him. But we got Cool Cat in the house. So we got about 5 minutes left here in the free to the public chat. If anybody has any questions, let me know, and I can go ahead and get those answered. We could do a quick chart review if anybody wants to review a chart really fast. So that's an option. So go ahead and let me know, and I will just review tomorrow's data until that happens. We do have not much happening for the rest of the day and tomorrow, so it might be like a decent day trading day. The market was a little bit slow, but it's coming out of that. So if you kind of look back at the euro, it's a good example. Let me roll to a little bit higher of a time frame here so I can demonstrate to you. We talked about yesterday how the market kind of, it's fits and starts, right? It's what do you call it? It's impulses and retracements. It's ranging and impulse, right? So right now we're in a bit of a retracement. So, on a higher time frame, you can see you had a little bit of an impulse here, like a hard move kind of up. And then after that hard move, we saw a bit of a range, if you will. Price just kind of stayed back and forth in this area right here, right? More or less. And then you have another impulse, right? And then it seems like we're kind of in a rangy type area, or at least a little more of a retracement where price is more choppy for the moment. So we don't know if that's going to break below that, but at some point, there's a decent chance there will be some kind of a move down. Now, it might go way down here. It might only go a little bit and then head back up. We don't quite know that yet. If I were to guess, yeah, Arcadia, you might say that. If I were to guess, I would be like, I think it might range a little bit before it goes down. The higher time frame, though, let's take a peek at that. Let's see here. Waiting for the screen. Trading View's been a little bit slow lately. It's been bogged down. So, I mean, the overall look is still bullish. So, what could happen here, there's a couple of different ways this could go, okay? And again, this is applied to like other currencies, other markets as well, because everything is sort of based on dollar strength right now, a lot of it. That's why the rate cuts and all that thing, kind of stuff is important. We have this support right here that's pretty strong, okay? So it's from back here, this price action up there, that's an order block, and price may be attracted to that order block. And plus, there's also more price action right there. So it would not surprise me to see price kind of head into this area, and it may hang out here for a bit and then head back up. That's kind of what I expect. And I think you can expect possibly the same thing from, say, the SP 500. But yeah, Arcadia is asking if a retracement is like sleepy hungover traders. Well, in a sense, like the way to look at a retracement is, yeah, you have an impulse where, the bears and the bulls were fighting, and then all of a sudden one of them gave up. So in this case, like with the SP 500, which is, it's an index. It's one of the major indexes that equities traders look at. It's like the Dow. The bears and the bulls were fighting in this area, and also they were fighting in this area down here. This was, a range area, and as the bears ran out of energy, the bulls kicked in, and you see this impulse up. Same thing happened again, right? So what we're seeing right now is possibly the start of another range. We'll see. Doesn't mean it's going to happen, but if I look back historically, yeah, there's a decent chance price might kind of hang out where it is for a bit. If price can really break above 4,600, which is the top of this square right now, if price on the SP 500 can break above that and stay above that for like 3 or 4 days at least, I would think that there's going to be some more like bullishness, more movement up of price. So, that's kind of a wait and see. Otherwise, price may head back down here, and the corresponding price actions should happen over in the Forex markets. Same kind of thing happening more or less. So at any rate, we are at the end of the free show. I got the gorilla. The gorilla just popped on just in time to give us that gorilla send off here.
All right, you crazy savages listening to us on YouTube, wondering if you should or shouldn't. Look, don't procrastinate, don't hesitate, don't propagate the myth that you cannot do this. Join algofactory.tech, make it a part of your life. And I'll tell you right now, you stick with us, and I guarantee you in 6 months, you will be in a different place. If you dedicate yourself to this is going to radically change you. It's going to radically improve your life. I'm telling you right now, guys, whether it's creating an additional stream of income or developing a new set of skills that allow you to fire your boss, this is the place, and trading is the way to do it. So come check us out, algofactory.tech. Cowboy, let's get into it.
All right.